This is Justin Pulitzer. This is my weekend review video for Sunday, November 15th, 2015. It is being filmed on the 14th, the day before on Saturday, for early release. Anyhow, on Friday we had a terror attack in Paris that happened shortly after the close on Friday. And I always talk about the news falling along the line of least resistance, and we have been in a corrective phase this week. I'm going to discuss my macro outlook and then get into some of the momentum stocks that everyone finds interesting. So let's start off with the 6 market keys, because this is really what's led the way of the market for a while, and we'll start with the VIX. I have this on a 2-year chart just to show you context about where we are, and we all know we had this big spike a few weeks ago, and since then volatility has been calming down with brief interludes of rally. We came back down sort of toward the middle of the lower end of range. And then this week we've broken out. You can see we took out this downtrend line. We cleared over the 17s. We got up to about 20. And in a kind of past volatility spikes that weren't, crash spikes, we've seen highs as into the 22, 23s, 25s, and even in extreme cases to 31. And I drew a Fibonacci retracement from that high to low, and you can see the 38.2% fib retracement takes you roughly to these highs up around 28. I don't necessarily know if we're for sure going there, but I can say this, that we have now broken the downtrend line. We are peaking up into some past reference levels. This could just come back down, but it seems like we are probably going to see higher since we broke the downtrend, the 50-day moving average, and there seems to be a lot of fear in the market. Let's take a look at some of the other keys. The big key one that I think is really driving a lot of the pain in the tape has been the dollar, the strong dollar. We all know that rightly or wrongly, I have been the voice of lower for longer, meaning I think the Fed will keep interest rates lower for longer. However, all of their jawboning and the tough talk out of the Fed governors, they've been giving interviews and speeches, has caused a stronger dollar. I think also some weakness in the world has done this as well. And you can see in terms of historical context, we are above a range here that I've been discussing. We basically did it in gap fashion. It's been consolidating. Excuse me. I've been suffering from a cold for a few weeks, and I just can't shake it. Sorry if I sound like Kathleen Turner. And we've been consolidating above this breakout area for the last few days, and the fear, of course, is still higher. This will cause a lot of problems with companies that do business overseas. In pretty much every earnings report that has been a miss or has had trouble or really has gotten into trouble, they have cited the stronger dollar. The Fed is acutely aware of this. This has been mentioned in Yellen's minutes, and I really don't understand why they keep persisting. I think really what their goal is more to kind of talk down the markets to avoid a blow off top of like what happened in China. We'll discuss that when we get to the FXI in a moment. But I think they're sort of using a type of moral suasion to kind of keep the markets from getting out of control. But I think what they don't realize is that they could be causing a self-fulfilling prophecy. A stronger dollar reduces earnings, and that would reduce obviously the P in the price to earnings. The price of stocks will need to come down if their earnings are coming lower. They'd be reducing the E, actually. Sorry. So they'd be reducing the E, the earnings, based on a stronger dollar. So that is a very big risk in the market. This has been playing out in TLT as well. I had said that I thought we were in a kind of a potential new uptrend that has broken. We did, however, hold some really key reference levels, and that was the really the 118 strike, and we've been rallying the last few days back up. If this area here of consolidation, if this was to just do one of these and then break, then I think we're going to see this lower end of range here in the 114s, and If that breaks, the lower for longer thesis to me would be in a lot of jeopardy, because this could be kind of a topping pattern. It would be this. If we start losing here, I'm going to start getting a little nervous about the lower for longer thesis. But I will say that it really makes no sense for the Fed to raise, considering the fact that we have more of a deflationary problem than inflation. Anyhow, with that said, the 2009 crash peak was 123.15. I don't want to really go back too much further with that, but anything below there is a little bit suspect with regard to, you can see the swing low held here, came up, and then this was resistance. So you could see anything sort of above here is, I guess, more bullish for equity markets, also bullish for the bond market. Anything below there is a little bit more suspect. These lows here in the 118s really need to hold, or we could have some more skittishness in both markets. USO. Talking deflation, this is what it looks like. I don't really understand what all these, the Fed seems very worried about theoretical inflation as opposed to the very real deflation we have. So let's get into a little bit more modern times. You can see we had this very protracted down move, rally back up roughly to where some of the breakdown was, kind of a bit of a double top, and now we've been stair-stepping lower. I will say this, I do think that I took the liberty of drawing in a bit of a channel here. It seems like we are at the bit of the channel low. We may want to retest the lows completely, but this is getting a little overdone here. You can see it's been multiple days. Anytime that's happened, we've had violent rallies back. I think that's sort of what's going to play out here again, that we're due for a rally back. With regard to USO, one of the stocks I've been using as a global growth proxy is Exxon. And I've been saying that 83 was really where it needed to be to neutralize, and over 86 to me would be more, I guess that would really indicate, I've been using it as a proxy for global growth, and we kind of looked above, and then it has failed and has come back in very dramatic fashion and has broken the trend, and now I'm looking at fib levels. This had a bit of a flag pattern here, and that really took off from 98, so let's just say 76 basically. So I think that Exxon could have a little bit more down move into this area. Maybe it even wants to get the 61.8 down at 74.53. I have some put ratios on here playing for this move. But down in here is really, I guess, where you'd want to probably be selling some out-of-the-money puts or playing for a reversal. The 50-day, we are basically right on it, so this could be a key area. Maybe it doesn't want to get the full move back, but this is coming down in dramatic fashion, multiple days down. If we were to get steeper still down into here, I'd be looking for a bounce play for a long. But the key point here is we are still below this 83, which is really where the breakdown point was. You can see we got up into there, had price memory pulled back, spiked up, and now down. So this is getting a little bit precarious. Chevron is basically a very similar chart. The FXI is China. This is really, I believe, what the Fed is trying to avoid, this type of kind of gradual run up and then the blow off top, which leads to the inevitable crash. China has been behaving itself. I've been saying for a while that China doesn't really need to rally. It just doesn't need to be in crash mode again. Like, we don't need to see this. If we start seeing this, it's going to be very dangerous for the market. I guess the good news is a lot of the correction in this channel has been used up, and we are getting closer still to Fibonacci levels. I think the 36s and maybe even into the 35s, I think it's 35.78. That would be slightly below the channel, but I do believe that this, after these many multiple days, is probably going to be due for a bounce soon. So I would be looking for a row play with regard to FXI. You can see it does trade in gaps, so you have to be a little bit careful, but we did get the channel top. Now we're getting close to the channel low, so I'd be more inclined, if you've been short, to peel off some of the shorts and maybe to try for a reversal to the upside. If this channel gives and we lose the 61.8, we could be in for one of these where we want to retest the lows. That could be that will cause a lot of strain, in my opinion, on the stock market. One of the big stocks, of course, we all know about is BABA. This has rallied really, really strongly right into the teeth of the volume distribution, the volume profile you can see, and it's just had some responsive selling. This area in the 77s, I had said, with maybe a little bit of give down to 76s, is very key for it to hold. It has not, so I think we could maybe want to traverse back, possibly fill the gap. I like this for put spreads, or I don't know if it's in very near dated put ratios for a play maybe to the 50-day moving average. You have a 50 and a 61.8 fib retracement, so near dated put ratios down to there I think would work well, or if you want to play with spreads. This is looking like it does want to correct slightly more. BIDU, not really showing the same type of weakness. It did, however, come up. It broke the downtrend. It kind of got close to the gap fill here. We've just been kind of consolidating. This is looking a little bit more bullish to me, but if the tape rolls over, this could roll over too. So I would be a little bit careful, particularly with this swing low. So below 189.55 is probably a short. And if you can get back above here, there's probably a little bit more room to squeeze up, maybe close to these reference highs here around 214. So that's my thinking with BIDU. The other real driver, it hasn't been that dramatic the last couple of days, but the IBB, this is where the biotech is where a lot of growth has been. This is a big weighting in the NASDAQ. Actually, IWM has a lot of weighting in this as well, the small caps. So take a look. We had a head and shoulders top. We had a neckline breakdown. We rallied, had a check back, another breakdown, and since then we've just been in a series of, I guess, equal lows here, but lower high here, and starting to roll back over. Got the gap fill down here, but actually Friday showed a lot of relative strength. And someone had asked me, if you're short this, where would you want to cover? And my answer was actually this, that if you close the body above this day's body, also the 50-day moving average, I'd probably would have taken some of that off. We did close sort of opposing tails here. This was a bit of a look above and fail. The body closed in here, so showing a lot of relative strength, still holding above, I guess, this flag, albeit just a smidgen. So it's a little bit neutral here, although the trend is still down, but this body should have closed, in my opinion, a little bit stronger for the bull case. They wanted to really keep it over the body of this candle here, and above the 50, it closed just below there. So this could be a little bit iffy if this wants to roll over. I guess the ideal scenario for the bulls, and given the news from Friday, you probably won't see this, but the bulls, the ideal scenario would be some type of a gap and go above the downtrend to kind of catch everyone off guard. But until that trend really breaks, I think the biotechs are going to be under pressure. We all know about the Greek tragedy that is playing out in Valiant. Head and shoulders, snap, another snap, another, still more snap. This had held primary trend perfectly to the touch, rallied. Look where it stopped at the 61.8. Came back down, very weak, and then now is broken. So my thinking here is that short term there could be some type of a bounce in Valiant, but this breakdown is significant at the 88.5. So this could set up, if it coincides with the downtrend and that backside of the old uptrend and these lows, as maybe a right or right out short. I don't believe in pressing lows, so I wouldn't be like first initiating here. I like to short sort of when there's a rally. The 100% retracement is roughly where Left thinks, that's the Citron research guy, thinks that the stock can go to. He's been talking about $50. So there could be some more downside. We'll see. This is sort of going to be threading the needle. You've really had a really large down move already. It's probably later innings, but I think that unfortunately there could maybe still be some downside in this. There could be some tax loss selling or what have you. So let's see if there's some type of a bounce. Anything below this 88.5 though is still really, really bearish. One of my favorite biotech stocks is Gilead, although this is getting to be a little bit precarious. It's on a longer-term uptrend. It's been trading on either side of it. There's obviously been a lot of fear with the tough talk out of Hillary Clinton, the presumed Democratic nominee for president, that they are going to start lowering the prices or regulating the prices that these companies can charge. Gilead sort of like a bit of the poster child for expensive drugs. I was really looking for a retest here of the 85. The flash crash stopped just shy of it. Maybe it wants to come back down there. It would be coming from three really lower highs. I guess you could count this one, but I really look at the after more significant legs. So it could be a little bit precarious. I like put ratios for a move down there. Anything below sort of this hammer here to me was really precarious, because you can see this came back up, broke downtrend, was chopping. So really anything below the 105s, 106s is iffy. It didn't hold the 50, so I'm a little bit more cautious here short term on Gilead. Longer term, I like the stock. I just think it needs to maybe correct a bit. Part of the disaster that was this week was Macy's. You can see this came down ginormous. I actually had been playing this short here. I reversed. It started looking good, but now it's kind of weakening. So if we're weak here again, I'm going to be kind of looking at GTFO. The 50 is really key. We're a little bit below there. The next real obvious reference fib would be the 61.8, which is down in 31s. I believe there's also some chart references around 36 back here. I don't really want to get too into that, but this is looking a little bit precarious now. This got nailed on Nordstrom's. You've just had a complete debacle in some of these stocks, like Nordy's is down really big. This is really this is showing that there's going to be, I think, a lot of discounting because we've had a warmer winter. It's really, these retail stocks have just been, taken to the woodshed. Skechers, look at this. This was a gap down. Kind of tried to hold and then continued lower. We're at a gap fill, so this is really key. I actually believe Skechers is setting up for a long, either right here or maybe I guess it's a decent amount of points lower, but somewhere where this breakout was 21.56, you can see where this came as a gap fill around 21.78. So roughly 21s, I think, is sort of like probably the max downside. But this could be setting up here for a reversal. This was already sort of in a bit of a downtrend. You had the big gap and then follow through. So I'm thinking bounce soon, but there could be a little bit move lower. But I am looking for SKX for a bounce play. So those are the sort of macro events that are moving the market here. Let's get into the S&P 500 because this is really what's going to matter. Now, take a look what's happening here. The flash crash low basically was to this low. And you can see, you're starting to see a lot of symmetry. You had this rally. It was very choppy for a very long time. It came back down, basically chop, retested here. This low held. And then we had a pretty big rally back up into the meat of the distribution, and now pulling back. So the pullback is sort of, I guess, a little bit healthy, but my really what I'm looking at is, could this be a big rounded top in an exhaustion pattern for the entire market? The fear of that happening is very prevalent, I believe, and very real. We have some levels here. It's not a done deal. It's also very possible that this wants to reverse and still make higher highs into the end of the year for like a Santa Claus rally. Maybe when the Fed blinks in December, that we could see that. But things are a little bit precarious here, and I want to show you some really important levels. you can see where this gap here stopped. Let me go back. Was basically to the lower points of these resistances. These prior supports became resistance. We had a gap and hold and then go on the Fed. This was the minutes. This was the actual Fed. And we rallied up. We got into some resistance into the 2100s like I had discussed. And we've come down a lot. I said anything below this 207.84 is a little cautious. And we've just been knifing through there. So I will say this now. Anything below 207 to me is still suspect. And anything really below, I mean, we kind of look at where we're pulling back to. This was the throwback high before the correction, and then double bottom hold and then rally. So look where we basically came to on Friday, and obviously there probably will be. I mean, I shouldn't say there definitely will be, but there's probably going to be weakness on Monday. I think we were down another like 16 handles on the Terra information down to the 50, probably close to the 50. So we are into some levels here that really, really need to hold. This 199.84 to 201.90, this area, this is to me going to be the hugely key to the market next week. If we lose there, I mean, you could see there's a 50% and a 61.8. We could be playing with those fibs. I'm willing to say that, okay, we could get to the 50, and if it holds the 50 and rallies, that to me would still be okay. But this is really where you need to hold this box, and if we lose there, I think we will see the 61.8, and we could potentially see the gap fill. I like playing that with put ratios near dated, preferably expiring this week or the following at the most. I actually had discussed on the stream that I had some put ratios on that I took off Friday for a tiny little loss, just because I didn't like this action. I didn't like that we broke back below. If we were going to kind of hit here and then bounce, then I would have probably stuck with it. But just sometimes there's just a hunch that you get and experience from trading, and I just felt that we had a lot of downside risk potentially for Monday, so I took that off. It actually turned out to be quite prescient, because if we were midweek and I had this on, I'd have left it on. I think it was 203 to 200s. I would have left that on if it was midweek, but I just didn't want the Sunday night futures gap risk, because if it gaps down to there, then I'm basically defending it all week, and I might have some trouble. Anyhow, I am looking for a potential move a little bit lower here. This was really the meat that you could see that we had a spike up, and that failed, but this is really where the bodies lie, sort of the support, and we really need to hold here, or else I'm going to start getting really a little bit more nervous with regard to the overall, that big topping pattern that I was talking. The absolute line in the stand here are these lows of the upper distribution of the 197.86s. If we lose there, and like I said, I'm willing to give it a smidgen of give to the 61.8, but anything below here, I think we're going to be really back in a very serious bear market, and maybe this will really roll over. So those are the levels I'm watching. I think the expected move next week is about $4.79. That's what I'm reading. So that would imply a move either up to 207.30 or down to 197.72. So it would either take us back up to here, which is, like I said, really key, or really down to these lows. So we could be really into test mode, really serious, test mode next week. IWM had been showing a lot of relative strength. It is kind of back below some important levels, the 117.37 being one of them, and we are now kind of back into this range here, close to a 61.8. There's a gap fill down here near 110. That could be in play. We're below the 50 here, showing a lot of weakness. So I like some put ratios, playing, maybe long some puts here and then short some lower. I'm a little cautious with this one. This one has the risk of biotechs, and it's also sort of used as the proxy for momentum. It's really not in super duper trouble yet, but if we start losing this area here of the 61.8, I'm going to be a little bit more cautious. So the NASDAQ, which is the one that we all kind of I guess, care the most about, because this is really where all the momentum is, the momentum stocks, the Facebooks, the Apples, the Googles, the Pricelines, the Netflix, the Tesla, all that stuff is in here. You can see the Q's actually made an incrementally slightly higher high, and just filling kind of this gap of this spike, and there is some room a little bit lower. A lot of still relative strength in there, obviously. So I think that there could be a decent play with put ratios, maybe for a move to the 50 or the 61.8 fib. It would obviously be down really hard, really fast. This would be 10-point move. That would be, I think that would find some responsive sellers. You can see we have the confluence of all the big moving averages here. You have the 50, the 200, the 100. So I think in here it should hold if we are still going to stay strong. The thing that I'm a little bit worried about, and I'm going to show you with some of the momentum stocks, is like Apple, for example, is still in a downtrend. This is also looking like a bit of a big, topping out pattern. This being the head, this being, kind of a left shoulder. This may be a potential right shoulder, just a ginormous maybe head and shoulders. I call it head and shoulders because that's what a lot of people understand. But for me, this is really just a big possible rounded top. We're into some really key levels here with Apple. It broke on a downgrade below the 119.75, kind of tried to hold the 115s, and it just kind of gave out here. So there are some key levels here that I have marked off. The 111.27 is an important one. The 109.14 is an important one. And then we have a larger primary trend here we have now caught up to. We looked below, body still closed. So I think that we could be coming down to these reference lows here in the 107s. I like put ratios for a play there. Maybe we get there. We'll see. Longer term, I think there is some. If the market is really going to roll over, maybe Apple really wants to get the major primary trend and the major 61.8 down here near 85. It's really way too early to make a call like that. You can see we're still in a channel and there's still a lot of reference levels. I think the big mistake a lot of people make is they go to like the end level. They assume, we're rolling over, so naturally it's an automatic straight shot there. It's very hard to play, particularly if you're doing it with options, because options have time and things don't always, to get the direction and the time right together is one of the most challenging, and I don't necessarily know that would be an easy play. I do, however, think that there could be a move here to fill up. If this channel snaps, a move to here, I think 107 could be in the cards. We'll see. 109, 110, these are key levels. If we lose those, then I'm going to be a little bit more cautious maybe on the entire market. One that has been amazing relative strength is Amazon. And I said in the, I think the last video I recorded, I was talking about this on Periscope, and I said that this was really a good spot to take some profits. We got the 1.618 fib extension. It even got a little bit more. People are really greedy. I've talked about knowing when to sell being the, it's sort of, rather than getting the exact top or the exact bottom, but knowing when to buy or sell is the most important. And this to me was obviously a clear point to take some profits, and this is starting to roll over a bit. I don't know that the all-time top is in for Amazon, but I know that it's run a lot. It's been chased and chased and chased, and it is definitely pulling back. If it comes back to the 119.45 and holds, and this, kind of this midpoint of the channel and bounces, it's still healthy. If it breaks there, then there could be, some room. Maybe it wants to even fill the gap. Who knows? These things, stranger things have happened. Look what happened here. It rolled over. So I'd be a little bit careful with Amazon. These stocks have run big. People have a lot of profits in them. They probably are going to want to book them. You have a double top here. They're going to want to, they may have margin calls or problems in other positions that they're in, and maybe they'll sell their winners to kind of fund their losers. It's weird, but that's kind of the way people think, and that is what happens. Facebook also very similar. I've been bullish on this stock, we all know, for a long time. I think I was one of the only people talking about it getting 100 or even higher, and it got 110, and it it has been pulling back. I mean, we filled the gap here. We are right on the channel low. This is a really key area. If this holds here, it could still have a rally higher. You can see, though, that this is very typical behavior for Facebook. I don't necessarily know if we're going to get this type of a move again, although it is very possible. But I think that it would still be healthy for Facebook to pull back to 99. That was 99.24. That was really the big breakout. It may want to retest. It may even want to come back to the 50-day moving average. It's a 50% fib, and then the 61.8 is also very possible around 93. So I would just be a little bit careful if you haven't taken some profits in Facebook. It's probably a good area to do that. I think that the stock is run a lot. Its protection is still really cheap. You can buy puts or put spreads or put ratios very cheaply still. And I would suggest doing that. If you haven't taken profits, I would be looking to still book some. This is still, believe it or not, still pretty high. It doesn't mean you have to panic out of everything, but I have discussed this sort of regression line. We got above it. It gets a little expensive. Now we're kind of, look at what's happened the last few times. We've broken. It's come back. Here it actually stopped it here a little bit above, and then we pulled back. And look here, again, we're above it. So the stock is, believe it or not, due for a little bit of pullback. This happens. It's to be expected. Google has been also pretty strong. I had said that there was a little bit more room potentially to the upper part of this channel I kind of drew in. This top is a little bit artificially drawn because it's not really connected to anything. It was just basically I drew an uptrend and then used this high here as the channel top. We are below the gap high, so it's a little bit more precarious. 20-day is probably going to be the big test here. Could see a 50 or a gap fill again. Look what happened the last time it ran into earnings. It kind of held for a few days, came back down. You had the Alphabet news, and then it filled the gap. Maybe that's what's kind of happening again. We'll have to see. Again, a stock with a lot of gains, an expensive stock, kind of not really so much based on earnings, but on dollars that people can sell relatively liquidly. And raise money. I would be looking to maybe place some put ratios for the gap fill. I think that would be that could be a decently winning trade. Like I said, I don't know that the run is over or that it's going to get there very quickly, but I think that trade to me makes a lot of sense. Netflix. So Netflix has been a bit of a conundrum. It got here. I had said I thought that this was a sell. It came back down roughly to this lower part of the range. It didn't get the full move. Rallied back up, and now it seems to be coming back down. Anything below 105 or 103.88, I've said I think is a little bit precarious. Friday, we closed slightly below there. So there is a bit of a channel low here, but I think that this is really just in a big kind of consolidation pattern. I don't necessarily know that it has to be the top, but it is sure a consolidation. So I like put ratios or, right or right out short maybe against the 50-day as a move maybe down to the lower part of the range. That's not to say, that I don't think that the stock can go higher. It for sure can, but it really needs to take, now that we've stalled here twice, this becomes exponentially more important. So if you could take the 115s, like if this were to hold here and then rally back up, a buy stop above these highs to me would work, and you'll probably fill up very quickly to the old all-time high. However, I do think that it's this could be just this range, and we could be coming back down to the lower part of the range, so I like put ratios. Price line. Got the channel top as expected. I discussed this being a short. No really reason to rehash it. This is what happened. The 1280.97 is the sort of is the old high here. It was a bit of support here before the crash. This to me is an important area. I actually wouldn't be buying it, but what I would be doing is playing put ratios for a move to the lower part of the channel. Look what happened here. Lower part of the channel, slightly above. So above the channel here. And now maybe we are migrating back to the lower part. So I like put ratios, or if you just want to wait, we could get down to the lower part of the channel and you could buy it. Oh gosh, sorry about this. You could play this with put spreads or put ratios for a move to the lower part of the channel, or if you want to just wait, wait till it gets down there and then do, a right or right out trade long. That to me would make a lot of sense. Tesla, I guess it's hard for electric car companies to make sense when oil is crashing. It did gap. I said I thought it was a shake and bake play for earnings. It got up here, that worked out, and now it just kind of fell apart. Really key area here if it can hold. It's down multiple days, so you probably would at least get a bounce. This is a good day trade area. But if this snaps, it's very possible that we re-see this these lows. We are on a really key trend line here. It's really important to hold. You can see it starts from back here. It held here. It held basically here for the flash crash, although I kind of drew in a secondary trend, and we are really precariously between those. This really needs to hold in Tesla, or it could fill. I would like put ratios or put spreads for that play if it does snap. However, I will caution it's down multiple days. You might not get the acceleration you think initially. You'd probably want to wait for some type of a snap, bounce, and then play it on the bounce to get in for the short. Let's talk about the silliness. My favorite stocks to hate on. Fitbit. Look at this piece of you-know-what. It broke the all-time low. It did this on a secondary. I think now you could maybe rally back up. This was a pretty decent-sized hammer, and it's been down so many days. I'm still not a fan of these stocks. I mean, I just don't see what's the upgrade cycle in Fitbit. Once you buy one, why do you need another one? There's tons of competition coming in this space. It's sort of a one-trick pony. I'm not a believer. And if you draw these channels, if you sold immediately when it snapped, you saved yourself a lot of pain. That's all I'm saying. This was a key reference low. You had these lows, and you were well below there. I wouldn't be first initiating short here. If anything, I'd probably be looking for some type of a bounce. But longer term, I'm still not a huge fan of these stocks. The one I've hated the most is this Gopro. I've been talking about this being a single-digit stock. Believe it or not, I still think it's possible. We're below the all-time lows. Look what happened here. Gap below, coming down now hard. I will say this, though. I'm willing to play row for right or right out long against 1960. If you measure 100% from this range to here, the 1.618 Fibonacci extension to the downside is 119.60. If it came down here, I would probably be looking to maybe sell some out-of-the-money puts just as a... this actually didn't get down here. Got down here a little bit longer than I thought, but I think the channel low could still be in play. I know that it's a lot, but look, I drew it in. I just used this line. There's not a second touch, so it's hard to tell if it will get there exactly, but look where this kind of ends, $10, $9. That's, the single digits where I thought this could play. I mean, if you want to play this with put spreads or put ratios, it's possible. I want to really see how this 1960 holds, but, it's real possible that happens. I hate to say it. They don't have a Christmas product. They didn't do so great on their earnings. Amberella is also weak. Take a look at this. This reference low is really important. This 48.50. It held. It's coming back down here rather quickly. The next stop after there would be 44.66. I've been saying that I think the primary trend and the real breakout of roughly 36.5 could be in play. If this were to break, I would be interested in buying down here for a right or right out trade. That would really basically take back all of the run. It might overshoot, but I'd probably be a put seller down there. If we could hold 48, maybe it wants to bounce again. I would be a little bit careful. This came down here now. Again, this is pretty quick. You took out these hammers. To me, this is looking weak. If you're bullish, right or right out against 48.5, but below there, it's really GTFO and probably, again, a short. I hate to say it, but these stocks, they're coming down. I didn't catch this one the other day. Someone asked me to cover it, so I am. More silliness stock, MBLY, a lot of hammers down here. Look at this. We are 1, 2, 3. I count this as 1, basically. 3, 4. Now this is the 5th touch. How many times when you bang on support does it hold until it gives? Now This was a key gap fill. These hammer lows are really key. If this snaps, you could fill the gap all the way down here. There is a 78.6 Fibonacci here, but I would be thinking primary trend in the gap fill, frankly, and maybe a retest of these lows down in the 32s. That could be another $10. Real careful. If you're long, this is not what you want to see. If you're short, this is exactly what you want to see. So let's see if we could get that breakdown finally. I'm going to end on SHAK. This is one I had been playing long. It got to where it needed to. It's now come down a lot. I think they had some more shares they were releasing. You are down into some really key reference lows between the 41 and the 38.64. I actually kind of won a gentleman's bet for a burger with my buddy Brad on this, that it would get 38s by November. I won, so I get a burger. I am thinking that after 1, 2, 3, 4, 5, 6 days down, maybe a smidgen more, I'd be looking for a long. I'm roughly thinking about selling some out of the money puts. That wouldn't really necessarily be for an immediate gain, but it would be a sort of for a longer term play. My real I will say this though, I'm really concerned. They do have a pretty rich valuation, and I drew a channel in. This is sort of a made up channel. There's not two parts that it's connecting to. I guess if you want to connect these two, we could do it that way. Let's see. I'm doing this live. That you could have a trend, a channel touchdown there. So this is really kind of a right or right out area. If you lose there could. I mean, I know it seems like a lot, but I mean these, anything can happen in the stock market. Look at these touches. They've been pretty vicious moves. Granted that the stock is sort of, it wasn't $100 like it was, basically $96 coming down. It's taken back a lot. Longer term, I think that this stock could potentially have higher, but, right or right out, careful. Anyhow, that's my story. I'm sticking to it. Let's have a good week of trading. Very careful this week with the, the terror news and the fact that we still have a little bit more room to come back down. But we now know the levels. There should be no fear. If you're not following me, my Twitter handle is @JustinPulitzer. Be sure to follow me. I post a lot of trade ideas and video links. If you're not subscribed to this channel, please hit the subscribe button. You'll get notifications as soon as I post new weekend review videos, Periscope rebroadcasts, and special edition videos. If you like the video, just hit the thumbs up down there, and please leave a comment. It helps me make the videos better. Anyway, let's have a good week, and cheers.